Hey everybody, Mariza here from She Knows Crypto with this week's Last Week in Crypto News. So markets are looking up, right? We've got Bitcoin kind of knocking on the door of 7,000 US again, and the other cryptocurrencies seem to be lifting up, at least the top 20s-ish, which is good news. Why is that happening? Again, the markets are always looking for a reason to pull one way or another because, again, cryptocurrency does not behave like any other asset that we've known. So, some good news is that big businesses are investing in the blockchain. Facebook's director of engineering for the last 3 years, so the architect of all that is Facebook for the last 3 years, has moved over to lead the blockchain team for Facebook. So that is a very positive indicator for the technology in general, as well as the CIO of the New York Stock Exchange has now become the CTO of Gemini, one of the largest online exchanges based in the US. And we're seeing a lot of these waves of investments and decisions to push resources from very large projects and companies and governments that continue to go towards the blockchain and invest in it as a technology. So that legitimizes blockchain and cryptocurrency. Good news for the industry overall. Speaking of online exchanges, Coinbase has officially launched their institutional grade custody system. So what does that mean? So Coinbase is an online exchange, one of the largest in the world, and they work with retail investors, meaning people like you and I that are personally want to exchange dollars, for example, for cryptocurrency, an online exchange. Well, they want to do this, and they've set up a program for institutional investors, meaning large funds, pension funds, perhaps hospitals, endowments for education, any institution that's sitting with a large pool of money, hundreds of millions of US dollars, that wants to invest a portion in cryptocurrency. They have certain investment guidelines that they need to follow. They have a board that says you can only invest in this certain way. So if they're going to invest in cryptocurrency, they want it to be very, very safe. So Coinbase is calling this product institutional grade custody with a whole heap load of extra security layers on top of Coinbase guarding their private keys. Now, what do we know about private keys? I say this over and over again. Whoever has the private key owns the cryptocurrency. So Coinbase has everyone's private keys. Coinbase really owns the cryptocurrency. They are being a custodian, but they own the cryptocurrency. And they're inserting themselves as an intermediary, which goes against the essence of and purpose of cryptocurrency in general. However, they are one of the biggest. They manage about $2 billion in crypto assets. What the fuck? 20 billion. 2 billion, it's not even enough. 20 billion. Again, I say this over and over. If you've got your money on an online exchange, it's not yours, it belongs to them. That's a heck of a lot of risk. If someone were to go into their Swiss vault and steal the USB drive that has all of the private keys, poof, crypto gone, belongs to somebody else. Whoever has the private key owns it. So if you are one of those people that's keeping your crypto on an online exchange, at minimum, download a wallet. Download Jax, download Exodus, any one of those things, put it on your phone and move it off that exchange. It represents a great risk. So that was the alarming part about that for me, the 20 billion in crypto assets that Coinbase is sitting on. But the good news of that is that now that there's a vehicle and a mechanism that institutional funds that own these large pools of money are able to use to get into the cryptocurrency market and to invest in the cryptocurrency market, this is the floodgate that I keep talking about. So we could see a large amount of money looking to buy into cryptocurrency, which again, law of supply and demand will bring the prices up if that happens. Next headline, a Bernstein report came out with something that said cryptocurrency is not like the dot-com bubble. So we keep hearing that cryptocurrency is a bubble. It's just like dot-com from 2000. Well, what they're saying is that cryptocurrency is building an infrastructure that's the alternative to Wall Street. And I mentioned this in a recent segment of last week in Crypto News, that the millennials are not going to be out there buying those booms and busts of the stock market. So this alternate type of Wall Street, alternate capital market, is a lot different from the stock market. Why? Well, this report says it's because it's a 24/7 system. It doesn't have an opening bell and a closing bell. Things can't happen in the middle of the night. Different types of insider trading. It provides a better check and balance. It also contributes to our volatility, but it provides a better check and balance. to the overall market, or at least that's the theory that should happen. But they're also focusing on Bitcoin and not necessarily ICOs. They're very critical of that unregulated space. But again, it puts a little more thought into people that are saying and always throwing out there, this is a bubble, it's a bubble. It's different. Cryptocurrency as an asset is different. It does not behave like stocks and bonds. It can't. And this is another report that recognizes those differences in the cryptocurrency market, and also looking at that it's still in its infancy. Building these new types of financial markets is something that's being done now, especially with funding mechanisms like ICOs. We're not really sure yet where that's going to go, but the groundwork is being laid now. In other news that's not so great, cryptocurrency is illegal in India. The Reserve Bank of India has deemed cryptocurrency illegal, and the police seized about 2 million US from some crypto kingpins, as they were described in India as they were passing through some airport. I haven't been able to find exactly how they seized it, because cryptocurrency in its essence is to be something that can't be taken away from you. It's not like an account that can be frozen by the bank or a government. So how exactly they seized, maybe they seized the computers, but if these crypto kingpins didn't have enough security around their private keys, not so much of a kingpin. So again, not sure how the police seized it, but that's what the headline says. The other part that's a little bit scary, or a lot scary, is that the police or the government has shut down the online exchanges. So anyone that has an account with an online exchange, like the India version of Coinbase, they can no longer, as of July 6th, convert their cryptocurrency into rupees. So no fiat for them. Why you'd want to do that, I don't know. But the government stepping in and saying this is not allowed anymore and freezing everybody's accounts essentially is pretty scary. So again, another reason, if you have cryptocurrency in an online exchange, get your own wallet on your phone. Super simple to set up. I can help you with that. And just pull it all out. It takes about 10 minutes to just pull your cryptocurrency and put it on something where you actually own the private keys. Another piece of developing news, interesting news, for those of you that pay attention to the journalism world, the media world, as we all do, we can't not, with social media and all the different sources to get online news, as I'm giving it to you as well. There was an article about journalism and journalists and news outlets putting their news on the Ethereum platform, on the blockchain. Now, why would they want to do that? There's a couple trends with different projects, startups, news outlets trying to figure out how to use this blockchain technology to improve journalism and truth in journalism and minimize the fake news. So a couple of different ways is to have some checks within the blockchain, within smart contracts, to be able to ensure that there's ethics in reporting, truth in reporting, to prevent censorship, because again, on the blockchain, once it's out there, it can't be changed. That's the way it is. And then also trying to figure out how to move the incentive model, the revenue model of the media and journalism from an advertising, corporately run model that pushes out specific type of news to more of a merit-based or a per-click base that would go to the journalist. Even people can go out and put out bounties for stories that they'd like to see. So this is very exciting. The project's called Civil, that's starting to figure out exactly how to do this. And again, still in its infancy, probably not going to get it right the first time, but the blockchain has so much potential to really help what's happening to our media and our news and fake news and all of those types of things with social media and everything we've seen in the last couple of years of how it's just destroying our news cycle and reporting and truth in the news. So that is definitely something positive that we'll continue to see over and over again. And then, of course, my favorite segment, the last segment, the ShitCoin of the week, is called Ingot coin. The Ingot coin looks like it wants to take every financial tool and system and institution and centralize it, essentially creating a financial platform that allows for exchanges between coins in fiat currency, adds liquidity, has an ICO incubator, basically does everything. They're calling it the Ingot ecosystem. I'm always worried when they use the word ecosystem. It's just such a buzzword that it really doesn't mean like the biological thing that it used to, but it's fancy. And they've got a very nice white paper that identifies a lot of problems with the financial markets that they're all going to solve. But that's essentially all they've done. They've created a white paper and a website, and they raised 40 million US dollars worth of cryptocurrency to fund this project, and essentially really haven't done anything other than assemble a team and a white paper. And I always see that as a red flag. 40 million bucks for a good idea, or maybe not even a good idea, because we're talking cryptocurrency. Aren't we trying to get away from centralization? And then the other typical red flags: the founder gets about 2 million US worth of crypto right off the bat. They do have 50% of it being held for 18 months, but right off the bat, nothing done, nothing performed other than executing a large crowdfunding. That's the reward you get with ICOs. If you can execute a large crowdfunding model and actually get the money, then there's your bonus, and you haven't done anything. The other piece that was a red flag for me with this particular coin is they talk about the security of the coin and the value of the coin in the form of its utility, being able to use it on the platform, as most of them are. But it also specifically says that the coin's value will be determined by capital gains and dividends. What does that sound like to you? That sounds like a stock. That sounds like a security. And nowhere in this white paper does it mention being any type of registered security. The group, the founder is a woman, and the group is mostly Middle Eastern, from Jordan, with some type of investment groups. The experience of each of them is kind of vague. One of them is a sheik, and they get these huge bonuses. And in the end of the middle somewhere of the white paper, it says that the company itself, that will be Ingot, will be registered in Estonia. So we got a little bit here, a little bit there, talking like a security, walking like a security, but not saying anything about being a security, which is all a bunch of red flags. So that is our shitcoin of the week. Thanks so much for tuning in. I appreciate that. Appreciate any comments that you have below. And look forward to the next week in cryptocurrency. Happy crypto investing. Thanks for watching. Bye.